Happy Tuesday, everybody. Yields down, stocks down. I don't know when we're going to break this pattern, but it's been happening with a dulling regularity over the last couple of weeks. And usually when the yields are down, cyclicals tend to be on the weak side. That's what's happening. Your banks are down, semiconductors, transports. This is a really regular pattern. We're seeing energy, materials, all a little bit on the weak side. We've had a nice rally, though, since the bottom. What was it, last Thursday? The Dow, we pointed out yesterday, Dow moved. This was the bottom on Thursday. That's 800 points or so for the Dow Jones Industrial Average. Nice move that we've had overall. And what's it based on? Frankly, it's just based on a lot of hopes, at least as far as I can see. You can see this, what we've been getting here. The hope for stimulus from Germany, the hope for more stimulus from China, the hope of this endless U.S.-China trade agreement eventually materializing in some form or another. And most importantly, short term, the hopes that the Fed is going to send very dovish signals at Jackson Hole, which, by the way, is an academic conference, not designed for people to stand on the driveway and tell everybody, oh, don't worry, folks, we're going to be whatever you want. We'll be as loose as we have to be. So it seems like expectations are very high, short term, particularly for Jackson Hole. Markets have been up recently, so it seems to me risk is a little more to the downside, that we could be disappointed at Jackson Hole and what's going on over there. In the meantime, we've had this cyclical rally that's been going on in the last few days as the yields have come up a little bit here. So energy stocks, financials, technologies, industrials, materials. Here's all your cyclical group. This is since the bottom on Thursday. I'm talking really short term here. They've all had the rally. So what overall has been going on elsewhere? I think it's important just to take a look at some of the retail numbers. I know Jim's been talking about this recently, but we've seen Home Depot, Kohl's, TJX. The good news is they've all affirmed their full year guidance, and that's the single most important metric. Kohl's comps missed, TJX's numbers, their comps and sales missed on this particular quarter. But I want to point out the power of buybacks once again. I concentrate a lot on this because it really does make a difference. Kohl's is one of the big buyback monsters of all time. So if you look at their numbers here, they had $1.55. The consensus was $1.53. And you say, well, that's great. They beat by 2 cents. But in fact, because they've been such active share buyback companies, 2 cents of this was because they were buying back stock aggressively. So actually, if you discount that, they're in line. Now, does this make this less valid because it's a buyback? No. But if you're interested in really growing your earnings by actually sales and business improving rather than financial engineering, it does matter. Kohl's is one of the great buyback monsters of all time. If you take a look in the last 8 or 9 years, and I tend to go back to 2010 because that's when the buybacks really started exploding, 2010 and 2011. So you look here, they had over 300 million shares outstanding in 2010, and look what they're down to here. They've about half of that. They've got about 160 million. That's a reduction in the share count of 47% in 9 years. What does that mean? It means that all other things being equal, all other numbers being equal, their earnings are 47% better than they were in 2010 just because of the buybacks. Forget about whether they actually had any sales increases or did anything to overall improve their business. And again, it doesn't mean it's not valid. Of course, the numbers are valid. Share buybacks are perfectly valid. But for people who are more interested in trying to figure out ways to improve sales and business and things like that, those kinds of metrics do matter. Some people call this financial engineering. You can call it whatever you want. It's a very, very important part of Kohl's, as well as many other companies' earnings picture today.